on commodities with what we saw yesterday, especially on copper, but also on gold, silver, etc. So first rates are on your screen. We start at about 22,460, 450. You got the Sensex, which is starting at about 73,870 right now. So it's a little lower, but it's well behaved. 25 lower on the Nifty and about 85 lower on the Sensex is what you have. The mid-cap index is down about 0.25%, and the small-cap index is starting about, I think in the round about 0.25% lower as well on that particular index as well. But it's all about specific stocks, and it's been a very, very vibrant market with, of course, a lot of earnings reactions and otherwise as well. Lots of moves. Sonia has got stocks as always. Sonia.
Well, thanks a lot for that. As you rightly pointed out, there's really nothing much happening with the headline index, right? So let's take it to individual stocks now. BEL is really the stock of the moment, 6% higher. Remember, BEL has had a very strong run in the last many days and good numbers coming through. Revenue growth of 32%, EBITDA has risen 25%. And I think what the street really likes is the fact that the company has raised its guidance, it's beaten its order inflow guidance for the full year FY24. So 7% higher now on BEL. SAIL is the other one that I'm looking at. The adjusted EBITDA was better than estimated, but the volumes were down about 3% year on year. So the stock is down about 1% as we speak. City Union Bank is the other one to look at, 2% lower. The operating profit has declined. That's why the stock is under pressure, but the asset quality has improved and the NII is up about 6% year on year. Biocon has also been in focus. It's up almost about 1% right now. There's positive news flow there. Ujjivan Small Finance, the merger has aided the top line, but the asset quality has deteriorated. So I think the street likes the fact that post the merger, the top line growth has been solid, up about 2.5%. Kalpataru Projects has won a contract value of 3 Aramco orders, which is at about 7,550 crores. Huge contract coming in there, and the stock is up almost about 8.5% right now. Data patterns also in focus this morning as the revenues of the company have slipped 2%, but the margins have risen sharply, and that's something that the street likes, 1.5% higher on data patterns. IRFC had a pretty strong P&L. The NII was up about 35%. The stock in general has been a good mover lately and now up almost about 3.5%. And Balkrishna Industries generally tends to get very volatile. In the conference call this time, the company said they didn't choose to give any guidance. They said that the geopolitical environment is a bit tough, so no guidance given. But the stock is surging now. Remember, the numbers for Balkrishna Industries were very good. No problems at all. Strong growth on the top line. Margins have improved. And the management, although not giving any guidance, but overall mood was quite positive on the numbers. So that's Balkrishna Industries up 7%, big mover there. But overall for the market, very quiet. I think it's not a bad thing, considering we had a good move last week. We're just holding on to the 22,400 mark. Back to you.
All right, Sonia, thanks a lot for that. Well, let's focus on a couple of big movers from the broader markets. IEX, we were telling you earlier today that, in fact, technically things were shaping up well. Vivek as well told us that, a couple of brokerage upgrades out there. So the stock continues to pile on to the gains. 2 sessions, the stock is, up more than 7-8% odd. So big move is what we're seeing on that one on big volumes. Whirlpool, the gross margins expanded by around 400 basis points odd. There was some part of that came down to the EBITDA margins as well. So we did see that the margins came in at 8.3%, which is the highest we have seen in 8 quarters. And that's why some brokerages are a little bit positive. So that one as well up close to 2%. Shankara Building Products, well, that stock as well, you did see the revenues that came up by 14%. The margins as well were holding steady, but in absolute terms, the EBITDA number was up close to 30%. You have a demerger as well that's already been announced a few quarters ago. So the street is coming to terms with that. Vinlas Biotech, the revenues out there were much better. 170 crores, that compares with around 140 crores. And the EBITDA number as well improved to around 13%. So that as well from the broader markets, Ekta sent this review out. It's up close to around 13% as we speak, 10% as we speak, margins are around 13%. BEL, that's one of the biggest volume movers. So quite a few stocks in the broader markets moving on rather good volumes. On the flip side, you have Trident, that's down close to around 6.5%. So some selling being seen out there. And, EIL, that stock as well is down close to around 2%. Keep in mind, some of these stocks have already seen a big rally, so they're giving back some part of the weight that they put on. Prashant.
Okay, well, that's the market open for you. We're down about, 50 points, 22,458 at this point in time. And it's a softish kind of start. Last few days, of course, the market has bounced. So maybe seeing a little bit of rebound, sort of move on the other side. PSUs, of course, IRFC, BDL, RVNL, this entire list continues to do very well. Look at the pigment makers, Sudarshan Chemicals, 12% higher. I think the stock's gone back to its previous highs. Canes is another one. They're guiding for 60% growth, 100% increase, 100 basis point increase in margins, 11% move on Canes after, of course, a fantastic week, which was the last one. Shakti Pumps, of course, stocks now all closer to $3,000. What a move it's seen, Shakti Pumps. Although I must say, market breadth is negative, clear, out and out. Aptus has seen a large block, a very large block actually. Volumes are humongous, 5.5% lower on Aptus. And CG Power, I think, has also seen a block with the stocks now about 2.5%, 646 or so. CG Power, of course, also has seen a tremendous move. Delivery, numbers disappointed, 7% cut. Delivery, of course, is a kind of a play on e-com. What else? Parag Milk down 10. Medanta, there was a bit of a disappointment. The hospital company, 4% lower on Medanta as well. So that's the market, the long and short of it, the up and down, and we'll come back to some of these individual names in a bit. But Samir Arora is our market master of the day. He's founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here. Thank you very much for your time. You're back from travels back from extensive travels, if I can say, in UP, the Hindi heartland, meeting politicians. We've been all seeing your Twitter posts with top leaders, sussing out what's really happening on the ground. So tell us the feedback that you've got across through this sort of political yatra, if you can call it that.
And there were many tweets you didn't see because I didn't put them up to avoid trolling from both the sides. But anyway, so the thing is, I went in thinking that we must get some idea in the end phase or last few phases that what is happening. But I came back thinking that it is not as complicated as we make it out to be, which is, will the BJP get 290 seats, 280 seats, 320 seats? I think it doesn't matter. What we need is, at the minimum, will they get 272 seats or not? And I think that is a high probability game. So beyond that is more our intellectual interest in this game. But practically speaking, although that day people may be disappointed, not disappointed, but I finally am thinking that I am only interested in that number. And the probability of getting that number is very high or higher than that. Many people concluded, because this was a big group, that will be same as last time. Some said higher, lower. It's too complicated. They were more episodes and gossip that we got rather than being able to say by going to 2-3 places like Raebareli, Amethi, Lucknow and Ayodhya, that you can get a full picture of what will happen nationally. But in the end, I concluded from all this that that is a wrong number to target. In terms of thinking that what will it be? Because beyond maybe a few days here or there, as long as the BJP government is back, the market will be okay. It might be a little less okay, a little more okay. That depends on the exact numbers.
Okay, so basically you came back with more confidence that, there's no risk to 272, right? And
I think that's the way. Because it looked that there are people who are against and people who are for, but at the end of the day, the starting point is too much in favor of BJP. The last time's victory was too emphatic, and therefore the share and all the things which all these guys presented. Even if you lose a few, I'm not saying that you are, because you can't figure this out in meeting a few people. And then I saw this interview of Prashant Kishore yesterday, where one point stuck with me, that if some 38 or I don't know, remember, some 38-40% people voted for BJP, then if you meet 100 people on the road, anyway, 60 people are not basically people who didn't vote. But it will look to you that I met so many people and they were all, or not all, that this X% was against. So the point is, after looking at, even at the visit itself, I had figured this out. And then I think this interview was quite convincing that I don't need to look at whether you're getting 310 or 320. I will be reasonably similarly bullish if you are at 272 plus. That's
No, got that. And that interview was very, very instructive. So for our viewers as well, they should go and check it out. So kind of goes region by region, west and north and east and south. And it's a pretty good one. Samir, in terms of policy cues, because you met some very senior leaders as well, right? In terms of going forward, and you heard confidence that, well, there's no risk to that outcome of them coming back. But in terms of policy cues, etc., anything you picked up?
In the policy, all these senior guys basically They don't make the policy, I think. So their only thing was that is the decision of the new government. But basically, looking at everything else, it looks at the policies will not be bad for the market. There's only one angle where I have this worry that if you win strongly, will you be very confident and therefore say that, oh, they're showing some photos of us and others. But anyway, so that, you'll be very worried about, we would be very worried about capital gain taxes and stuff like that. And I can say it that you may get as many seats, but if that is done, it will neutralize a very large part of the good feel factor, and it will be negative for the public because the new investors coming in have seen wealth creation for the first time. And it will be very negative. It won't be just negative, it will be highly negative, because when we say that the Indian market has outperformed other markets over the last 5 years, 10 years, that would not be the case if we put taxes in it. We just show you in the world the index level performance. But since no other market, and I would like to emphasize no, as in 0 out of, I think, 190 countries charges tax to, for example, foreign investors. Actually, if you do post-tax returns, then India will not stand out. And many of the biggest investors in the world, but even if they're coming from US, where there might be home taxes, are endowments and sovereign funds and these Temaseks and Canadian Pension Fund and RDR. None of these guys pay taxes anywhere. So therefore, if tax is charged at the source, then they will have to look at post-tax returns, and those will be okay, but they will not be as great as the current returns. And also the domestic investors who have recently come in and are creating wealth and are excited about this thing and are therefore supporters of liberalization and opening up because they see its impact on the market. So from both angles, let's hope they don't do that. Other than that, we are bullish, bullish, bullish.
Okay, bullish, bullish, bullish. Got that. Sameer, hi, good morning. So, post the elections, of course, elections is one event and it has its own, repercussions on the market, I think very briefly, right, for those 1 or 2 days. Then the market moves on to looking at, say, the budget, which is coming up in July. Then you have global events as well.
I disagree with that. I disagree with that. If it is the same government, it will have a marginal effect. If it's a different government, because people will take time to adjust. They also are not clarified in black and white what the policies are and what the view towards corporate sector, towards taxes. So all those things are not there in black and white, according to me. Maybe there was some manifesto which I have ignored. But broadly speaking, this is not that simple that it will be a one-day effect if it is indeed a non-BJP government.
Okay, got that. So it could be a binary event if it's a non-BJP
Up to that, yeah. And after that, you may say from next day afternoon, you are again bullish, because now we are saying that over the next 12, 18 months, we'll recover these losses. So when you look at it over 10 years, all these events look like small points. Just
very small blips. Yeah, I completely agree. No, my point is...
Even wars look like small point. But on the day one of the war, it is a war. So you can't say, don't matter after 30 years, when you look at this graph, it will look like a straight line up or something.
No, my point is for that retail investors watching you right now, does he have to tweak his strategy in any way? I mean, or does he just continue believing that this is an uptrending market with a few hiccups on the way? I mean, what's the best way to approach it now?
What I've understood and what I tell people is, because many people will be for one party, many people will be for the other party. And I think the need to distinguish is what in their mind should happen from what will happen. And I saw even in 2014 that many people were betting on what should happen and not what will happen. And I think this difference needs to be there. This is not an emotional thing. It is a practical thing. That's why I say practically, if you believe like me that, there is enough buffer so that even if things go a little bit wrong for the BJP, they are getting more than 270 with 30, 40 seats is a lot. Even if you, are doing badly. And so in the end, then it won't matter. It's your belief. But at the end of the day, differentiate between what you think should happen in terms of who should win versus what will happen.
Okay, hi Samir, good morning. So I think we've gone on for a goodish bit on politics. The message is clear. BJP getting a clear majority will be read favorably, and no tinkering of these capital gains taxes. That's
Yes,
something
very much, very much. I am the proponent of this no increase in capital gains, which I think should be brought up again and again.
Okay, so that's out of the way. Let's talk about a couple of sectors and themes. Since we look at your Twitter feed quite a lot. Auto stocks, you had put out a tweet that there are quite a couple of reasons why maybe you'll be a little bit skittish on the auto themes. Tell us more about that. How do you approach this space?
No, that is
done very, very well.
When it is big picture, I don't worry about small picture. Like in 22, I said it doesn't matter what the companies say. IT sector is going through a bad time, and because what happened, just to give you a setting, a company has some orders in IT. If they know that their client is otherwise going bankrupt because its client or that industry is doing badly, they'll say, no, we have got an order. We have got an order, so what can we do? We have an order. So they knew what was happening, because how if I knew without having met any client and they didn't know, it can't be. It's just that they say we have visibility of an order, sorry. So it's the same thing in auto. It's conceptually a capital destroyer of the highest proportion. I don't think there's been a bigger capital destroying business created in the world in the current context, where you are, for non-economic reasons, making the entire auto industry of the world move to electric vehicles because of climate and ESG issues, not related to economics. Because when you switch, the number of cars that you will sell will be the same as you were selling before. Of course, there'll be normal growth of the underlying industry wherever in India, maybe more or whatever, but that was happening anyway. So you are spending these billions of dollars to stay in place collectively. Secondly, there are new guys who've come in, and these new guys were not there in the IC business, but they are in the EV business. And therefore, now you have many more players. Now, in a business where you're going to protect and say, oh, I can't handle a Chinese company, I can't handle this company, that company's multiple cannot be the same as a company which is open world, because you are not allowed to imagine that for the rest of my life, our sector will be protected. So you are in theory protected for 1 year, 2 years, 3 years. And after that, this protection has to go away. So whenever the government of India or say in the US, they increase tariffs, you are not supposed to, in theory, because these days we've forgotten theory because of the new crowd, that you are not supposed to give it the same multiple as an unprotected industry, because an unprotected industry is more sustainable. So the number of players has increased. The old players have to make massive investments. The scale of investments in India, these big companies spend $3 billion a year. If you can type EV budget of Volkswagen, EV budget of BMW, EV budget of Chrysler, and you can see that they are in like up to 200 billion. And we are supposed to only say, no, we'll be protected. That cannot be a model in which anybody will make money. But if it does well, there's another formula we have that many companies do well. So we don't care about every company that does well.
No, point taken. Samir, just to...
And also there has been corporate governance issue in the biggest company. But because I'm interested in that stock, I can't talk about it. But you can't do this conversion of non-voting share at discount. That was not the deal when these shares were issued. But anyway, I'm interested in the stock. Let me disclose.
You talk about
okay,
Tata Motors. I
Samir, didn't say anything like that. You are
Fine, you didn't say anything. Just one, Samir, what you said, and take that point about, if it does well, you don't have to own everything that does well, right? You can own things which do well, and that's fine.
Every year, some 150, 200 stocks beat the market by more than 10-15% in that 1 year. We are buying only 35 stocks. Let us say we think that a stock should do badly, but it does well. So how does it matter? It is more important if I think that a stock will do well and that does badly.
Yeah.
I just want so many stocks do well, you can ignore half of them and still be okay.
Obviously.
Maybe you will not get all of them to be doing well. But you are hoping from your side that you get enough of those which do well.
No, you kept coming back once or twice or thrice actually on this capital gains bit, Samir. You obviously you consider it to be a very serious issue if it does still come through.
It is very serious because there is a point.
I'm asking you, are you picking up something? Are you sussing that? There's no way to know, frankly. But I mean,
No. I am not picking up. But in all the discussion, which look, I don't go and meet government guys since I don't go to. That's a different style of different people. But all these strategist type guys of brokers who go and meet PMO's office or Secretary Finance or I don't know whoever they meet in the government, they all say that this stock was there, and I tell them that it is your job to.
Oops, okay. I think there's some issue with that video, so we'll try and get back to Sameer in a bit. But for now, I just wanted to mention for the market, right? We have the mid-cap index is actually down about 120 odd points. So it's not anything alarming, but it's just that the market is taking a turn for the worse at the moment. And a couple of stocks, Data Patterns is down about 4%, BEML is down 1.5%, Titagar is coming in for some profit taking. It's a little bit of red on the screen is what we're seeing.
All right, I think the line snapped with Sameer, but we thank Sameer for joining in and giving us his view on the markets and front foot forward as always. Well, let's focus on another corporate, Sobha. The company has clocked its best ever pre-sales in FY24 and highest ever collections as well. Mr. Jagdish, the MD of Sobha, joins us to discuss more on the past quarter's numbers as well as the way ahead. Hi, sir. Morning, and thanks a lot for joining in. Well, FY24 was aided by strong launches of around 7 million square feet odd. What is the pipeline for the coming fiscal FY25, and how much of it would be in Bengaluru and other geographies?
Thank you, Nigel. We are very happy to state that we have delivered about 7 million square feet last year, highest ever we have done. And going forward also, we have very robust pipeline of launches. That's about 9 million square feet minimum is what we expect to do in about 10 to 11 projects across Bangalore, Gurgaon, Tamil Nadu and Kerala. These majority of the launches, about 50 to 60% of these launches are in Bangalore, remaining spread between Gurgaon and Tamil Nadu and Kerala.
Okay. So can you tell us, okay, 50% you said is in Bangalore and the rest are spread across other geographies. Got it. In terms of land acquisitions or buys, what is the expectation? Your land-related payments were up almost 3.5 times quarter on quarter at about 210 crores. Will there be more spends in terms of land buys? If yes, what is the strategy that you're looking at?
Yes. If you see our overall strategy in terms of managing cash flow and investment in future, for the last 14 quarters, we have reduced our debt by about close to 1,800 crores in cumulative. And particularly in the last few quarters, we have started seeing that there is enough cash flow for us to invest in future. We had a net debt target of 0.5, which we achieved. And from here on, we think that we will have enough cash flow to invest in new opportunities across geographies. Last year we did about net investments of over 450 crores, and that we think that we should be able to do in the future years as well.
Okay, and your current debt is at about 1,260 crores. So going forward, do you have any debt target? I mean, where do you think you can end the year with in FY25 and 26? Can you bring it down further?
Yeah, like I said, directionally, the debt would be going towards a lower number. But as we have become comfortable from a net debt to equity plan, the focus would be more on increasing our spends towards construction for faster completions and towards increasing our allocation towards new opportunities.
Jagdish, hi, good morning. Prashant here. Good to see you and hope we get this opportunity to speak with you more regularly, not just around results. But, just a word on margins, Jagdish, if you can. Because, from 11%, 10% to 8 point something now, what's the outlook? What's the trajectory going to look like through FY25 and beyond?
Fortunately, yes, the margins have come a little bit lower in the past year. Typically, the revenue and the margins in real estate gives a far view of the rear view mirror. The operating cash flow gives the current view, and the remaining revenue to be recognized gives the front view. And in our case, we have about 13,500 crores to be recognized from the past sales that we have done. those we think that we will be able to achieve far higher margins between 25 to 30% at a project level. And go as we complete these projects and start recognizing those, our margins should definitely improve.
So go back to the at least double digit?
From a PAT point of view, from where we are, we should move
EBITDA,
at least.
from an EBITDA point of view.
Yes, EBITDA point of view, again, we were earlier at about 20%. Now we are down to about 12.5%. We should go, we should move towards that in the next few years.
Eventually.
Yes.
Okay.
Okay, we will let you
Yes.
go on that note. Thank you so much for joining us. That is Sobha talking about their business, but the stock is under a lot of pressure actually. Down almost about 6% right now, so underperforming the market as we speak. Could also just be about profit taking because these are stocks that have done well in the last month or so. But let's now talk about Bandhan Bank. Their Q4 was impacted by elevated provisions. Their slippages also surged, but the asset quality improved. Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank, joins us now to talk more, of course, about the business and the way forward. Mr. Ghosh, good morning. I'll come to the business in a bit, but before that, I need to understand why you chose to step down so immediately from the bank itself, from the position that you hold. And also, was there no intention at all to take up any kind of non-executive role in the bank?
Thank you. I have been taken a very consciously decided to retirement of the 9th of July 2024, which is my third term as a MD and CEO. I have the plan on that. The bank is under the holding company. I like to go to this role of holding company as a strategic role and the bigger way to other vertical also.
Okay, all right. So, sir, a couple of other important points that we want to ask, and you just want to clear the air for the street. Is there an employee training program that's currently underway at Bandhan Bank? If you could give us a rough idea about the annual cost.
This is, you see, that from beginning of the organization, we are a microcredit organization. We are to recruited the fresh people. We trained in our own campus, and accordingly, we are grown in the business on that. And when we become a bank, now we have the 75,000 employees. Out of that, in the 45,000 employees in a microcredit, and we have a need to continuously training and refreshers. So we have there is a training infrastructure, so that we are providing to them. But I have not in a specific, I have not the recall on that, what is the cost, and it isn't part of this operational cost.
Could you clarify on this? Who heads the Bandhan Employee Welfare Trust?
There is a non-banker who are in the trust, and he was retired from the bank, and he is now under the development program, and he is heading on that. There is a couple of people is there.
Mr. Ghosh, just a quick point. Why didn't you sort of take up a non-executive role? I mean, just to kind of sort of press on that point, because we've seen other similar kind of thing happening at other banks as well, but people sort of staying on or trying to stay on in a non-executive role. Could you give us a sense?
I have not yet a plan on that. Clearly. So that I have the different views on this. The holding company is a very different structure in the banking act of the 2013, which have been given to us. So under that holding company, some other vertical also have been developed, which is different from the other private bank. So in that sense, I feel that I have the good enough time has given 23 years to build up this bank from this as a microcredit organization. I have need now to bigger role play as a strategy. Other vertical also I can be contribute on that.
Okay, I think the issue or the concern, Mr. Ghosh, is that you've been at the helm of the bank for a little over 9 years. The general tenure is about 15 years, so you didn't choose to wait for that. neither did you choose to wait for the RBI, giving comments on your extension. So that was the fear that shareholders had about what really went wrong and how you perhaps distanced yourself from the bank at a time when it maybe needed you the most. Any comments on that?
No, there is no that such of the comments. I feel that the entrepreneur can be developed the institution, and when the institution will be like to very good way to establish everything, then entrepreneur has a need to hand over to the professional management, and he will be take the role of the strategy. For that reason, it is a cause on that. What I feel that.
Okay. I have to ask you, there are some concerns that a lot of the money from the bank was used for commercial interests of the promoter and the promoter's family. Would you want to allay any of those concerns?
No, not any money is related to any of the related family or the promoter. Of course, there is a big promoter group. And of course, this is an other vertical. You already know that this has been developed. But other than this, is not in anything have been done any of the way on that very transparent way, very strong governance practice, and we are running this organization.
So you're clarifying that there was no money that was used from the bank by the promoter for buying any property or any other commercial interest. Are you clarifying that to us?
Yes.
Okay. All right. Mr. Ghosh, just clarify one more thing. On this Bandhan Employee Welfare Trust, it's not headed by your son?
No. He's not the he's not the employee of the Bandhan Bank. He's not the employee of the Bandhan.
Right, but he's taking care of this welfare trust, right? The Employee Welfare Trust. And if you could clarify, Bandhan Bank, does it pay any money? I mean, if he's not part of the bank, does he get any salary by way of this?
If it is not in an employee, how it can be get the salary?
So he's not involved in Bandhan Employee Welfare Trust, right?
He is not involved in the Bandhan Bank. He is not involved in the Bandhan Group. He is not involved in the Bandhan Employee Trust. He is not in.
Got it. Okay. We need to clear the air, sir, for our viewers on all these fronts. So we just said, we'll push a couple of these queries to you. Could you tell us, about any communication you have received from the RBI with regard to your replacement? Because you're leaving the bank without any names going to the RBI for approval to replace you. Tell us more about this.
No, if you see that every bank have the normal procedure. Accordingly, our board have been set up a search committee. And after that, they are appointed in there is a headhunter company, and this headhunter company is going to search, and it is doing independently by this search committee. Accordingly, it is a going process in a well on that.
Okay. All right. Do you want to leave us with some indication of what the sustainable growth could be like for the bank? Now that you've moved out, there is no certainty on who's going to be at the helm anytime soon. All of this news flow has come as a surprise to shareholders. Going forward, can you give us some estimates of what the growth, what the balance sheet, the P&L could look like for the bank?
If you see that the bank started is in 9 years before, with a book size of the 9,500 crores. So after this, the nearly 9 years, bank book has come 2,60,000 crores, advance and the deposit. Out of that, 1,35,000 crores is the deposit. In this financial year, we are grown is a 25% deposit, which is a 37.1% CASA and nearly 70% is a retail. So we'll be like to grow in this line of the deposit growth. And this is the one part. Second part is an advance part. Yes, if we not count our write-off, advance growth has come 18%. I feel that we can be like to future continue in the 18% year-on-year growth of the advances.
Okay, Mr. Ghosh, since we're clearing out a lot of queries today, final question, any possibility that Bandhan Bank could be looking at some inorganic growth, either being acquired?
We have not any plan up now.
Pleasure talking to you, Mr. Ghosh. Thanks a lot for taking all our queries and clearing out a whole host of issues for our viewers as well as your investors. Well, for the time being, we'll slip into a short break. On the other side, we'll be joined by the management of Data Patterns. Stay with us.
Welcome back. We got the market, which is down about 30 points. So it's a very, very quiet kind of a day if you look at the indices. But if you look at specific stocks, there is a lot of action. You know, defense and PSUs are doing very well. BEL, Bharat Dynamics are two names which come right on the top of the list with volumes. But there is also RVNL, IRCON, and so many others which are doing phenomenally good. I'll go down the list of stocks, but this is essentially what's coming up right on the top. Data Patterns reported numbers, and I'll just quickly summarize the full year numbers. So revenues are up 15%, EBITDA is up some 30%, and profits went up about 47%. These are full year FY 24 numbers. We have the management now with us for Data Patterns to talk about what FY 25 may look like. Mr. Srinivasa Gopalan Rangarajan, Chairman and Managing Director at Data Patterns, is now joining in. Good morning, sir. Great to have you with us here. Thanks very much for your time. Prashant this side. Can we start by asking you what happened in 24? Because the guidance was for a 25% top line growth. You've done 15%. What can we expect for FY 25 on top line and on margins as well, sir? I think you'll have to unmute yourself. Go on, sir.
Am I audible now?
Yes, clearly.
Okay. Good morning. Thank you for having me here. Yes, answering your question, last year, the guidance was around 20%. We could not ship a couple of projects, which is ready for shipment, but we couldn't ship it due to, inspection delays. But the product will be shipped probably this quarter. This year, guidance about 20-25% in top line growth, and retain about 30% bottom line growth, which is what we've achieved in the last so many years.
Has it already got this shipment that you're talking about? Was it just an operational delay? Was there any? Could you just go into the details a little bit?
No, we have a couple of shipments which is ready for shipment, but inspections got delayed. The inspection is about to start now. So hopefully the inspection starts this quarter, we will be shipping it. But the products were ready last year for shipment, and this is part of original plan. So there was a small dip in revenue, but that has been compensated because last year to this year, our margin percentages are much better than last year. See, this has been contract to contract. So you see that last year to this year, our EBITDA margins have gone up from 37%, 38% to 42%. So we had a slightly more profitable kind of contracts negotiated this year. So we're okay on the bottom line as per the predictions.
Mr. Rangarajan, can you help us with over the next couple of years, what is the proportion of orders that you're expecting from defense versus from space? Where do you see the largest amount of opportunity now? And will the dependence of DRDO reduce over the next couple of years?
Okay, see, largely the growth is going to be in defense, not so much from space. The space is actually a smaller player compared to defense in this overall gamut of market space here. So the larger play will come with defense. We expect this year about 1,000 crores plus on terms of new orders. This is all based on single-tender contracts, which we've already earlier quoted, a repeat order is coming, or some other contracts which you're going to get this year. We're not including the tendered market. We don't know which way it will go. We're talking about some more estimates. Only thing, there may be some delays up and down in the kind of contracts which we're going to get. But the estimate is about 1,000 crores plus we should get this year. Regarding the other point,
No, I just had a follow-up. You said 4,000 crores of new orders from defense is what you are hoping to receive, or you've already got?
I didn't say 4,000, I said 1,000 crores plus.
Oh, 1,000 crores. Okay, sorry, I heard 4,000 crores. I was wondering. Okay, 1,000 crores of new orders from defense is what you're looking to get, right?
Yeah, and gradually the market size will grow in the MOD business. And as you grow up the hierarchy in terms of full systems, the DRDO business will slowly come down as a percentage. If we continue to grow at the percentage we are growing now. Today DRDO is a significant portion of our company. We expect it to continue for more time to come. But the growth will happen over the next few years, next 5 years. It will come from direct MOD business.
Okay, all right. Hi, good morning, Mr. Rangarajan. So, 1,000 crores of order inflows is what you're looking at as you're de-risking yourself from DRDO business. Got that. Just to reconfirm the numbers for the current year, revenue growth of 20 to 25%, margins of 40%, and PAT margins of around 30%. Did we get those numbers correct?
That is what we're expecting to do this year.
Got it. Super. What about the exports business? That was relatively smaller, but you were talking about it going to double digit, I think so. So in the past year, how much did exports contribute and where is that number headed? And I think the cash conversion for you is around 300 days, right? It holds around those levels?
Yeah, the export business is about 6% last year, I think. We have contracts of about 60 odd crores, maybe about 80 odd crores. Again, contracts on hand for export. We expect to complete those exports this year. And some more export orders are expected as we go along. But this is not going to be a significant growth model today. The growth is going to be in building full systems for MOD. And once the systems are built, we plan to export those outside India. So that is how the growth is going to happen. Though we are in discussion many foreign multinationals, but that is to come to a large size business is going to take a few more years. Yes, we are trying to increase that business over the next 3 to 5 years, but that is not going to be an immediate revenue potential. So this is where it is. The second question, I forgot. What did you ask?
No, the cash conversion days, sir.
Yeah, we expect the cash conversion days to come down from 300 odd days. It's come down as you go along. More and more production business which you do, the cash conversion cycles will come down. Today, we are largely dependent on development orders. That is why the conversion cycles are slightly longer. But as you go along the next 2 to 3 years' time, the working capital days, the net working capital days will come down. Though we are stocking a lot more than earlier because of large order book we have, and we've stocked material for this year as well as next year deliveries. So the inventory levels have gone up somewhat, but this will be brought down as we go along.
Okay, 2 quick questions. One on the radar business. How is it doing right now? Radar and electronic warfare both. What kind of potential do you see there? And also, are you looking to invest more in the satellites business? What is the addressable market like over there?
The 2 key areas for data patterns is radar and electronic warfare. We almost do everything in electronic warfare with DRDO. Now we have spent more than 15-16 years in development of full systems in EW. Similarly, in radar, now we are building our own radars. We satisfactorily executed the 9 radars orders we got from Air Force and Navy on the open tender. We received this in 2020. We have delivered the full radar set. 9 radars have been delivered to Air Force and Navy. Similar to that, we are now participating in other Make-2 programs, as well as ab initio development we have started because we raised money in the market last year to do product development. We have started development for fire control radars, EW systems and suites, communication equipment. All this product development is initiated. The moment the products are come to, starts getting into trials, we expect some contracts to kick in. This is all, we are spending a lot of development money now to build future business. We expect the next 2 to 3 years, we'll start getting the large businesses as we want to go because the market size is very, very large. And unless we have products, we cannot increase our total addressable market. So instead of going and collaborating with the foreign companies, we are thinking of building it on our own. So with the result, we have raised the money from market. We are spending the money now building products. I think you will see that change in the next 3 to 5 years. the large order book will change based on that.
So when you say you're spending a lot of development money, what exactly is the capex over the next couple of years that you've outlined, and will it all be pulled in from the market? Will there be any debt that you would be looking to raise?
We raised about 500 crores in QIB last March. That's in 23 March. So this is essentially towards product development. Our existing cash on hand in the bank with investments, etc., is about 750 crores today. So we are fairly comfortable in cash. We will not necessarily to go in for cash now. We have used this cash to develop our own products for radars, EW, radios, etc., where there's a huge potential, upside potential available in the market today. So the idea is to build the products, take it to market, go through field trials, and see that we get the business. This is the idea with which we're doing the product development. And the capex itself, we've already built one more factory which is operational. We have additional land about nearly 5 acres with us. So we are going to build some more facility infrastructure so that when the orders start coming in, we are in a position to execute the contracts. So capex is maybe about 150 crores we'll spend over the next 2 years on top of development money, which will spend probably another 150 crores on product development we'll be doing. On the other part, on satellite, we're not very sure how the market size is going to go and the opportunity is going to come. So we are a bit cautious about that, building satellite and putting money inside. So we have full capability to build satellites. We are now holding back a bit. We'll have to see where the opportunities come. Then we'll start designing our own satellites.
Okay, all the best. Thank you for being with us on the channel. And speaking about the business, a revenue growth of 20 to 25% is what Data Patterns is expecting in FY25. Let's take a quick break. On the other side, we'll connect with the management of Vinati Organics to discuss their Q4 earnings. Stay with us.
Welcome back. Well, as promised, let's get chatting with the management of Vinati Organics. Ms. Vinati Saraf Mutreja, the MD of the company, joins us on the show. Hi, good morning, and thanks a lot for joining in. Well, you speak about ATBS demand coming back, in FY24 after a lull that we saw in FY23. Now, with the new ATBS plant being commissioned in the second half of this fiscal, what can the contribution from ATBS come in at, and what does it take your total capacity to as well?
Sure. See, ATBS, did very well in calendar year 22. And that's why in the beginning of 23, most of our customers felt that they were sitting on a lot of inventory, and hence 23 was a slow year for ATBS in particular. But we saw a lot of destocking happening, and finally at some point towards the end of the year, they did normalize inventory levels or run out of inventory. And so we're seeing good pickup in demand starting this calendar year, which will of course run into FY25. The new capacity for ATBS will be ready end of this year. We don't expect much revenue coming from the new line in this financial year. This will increase the capacity by 20,000 tons per annum.
Okay, but in ATBS, you'll be looking at least at a double-digit growth, Vinati?
Yeah, absolutely. We are looking at about 30%, 35% growth in just ATBS itself.
Oh, okay.
Okay, that's big. What about the overall growth? Has demand come back across all segments? And will FY25 growth largely be led by volume or by pricing? What's the outlook?
Well, the growth is definitely coming back through volume. We see good demand pickup across segments and across products besides ATBS as well. Butyl phenols is doing quite well. Even antioxidants, the demand is slowly improving and we are gaining more market share. Our other products, IBB, isobutylene, as well as some niche products, they remain stable.
Okay. Okay. So you're saying the growth will largely be led by volume. So what will the overall growth look like in FY25? What are you targeting? Vinti, can you hear me? Yeah, I can hear you now. Yes, yeah. My question was, I think we lost you at the volume part. So for overall, for FY25, what kind of volume growth are you looking at?
Overall, we're expecting about 20 to 25% volume/revenue growth.
20 to 25% volume and revenue growth, right? You were talking about butyl phenol and antioxidants. We understand that the potential revenues from this is around 1,000 crores. But does it get impacted because of the competition that you're seeing from China?
Well, see, butyl phenols and PTBP, which is our main revenue generator, because half of the butyl phenols are used in captive consumption for antioxidants. We managed to get an anti-dumping duty imposed, but the main competition is Korea and Singapore. In antioxidants, yes, we do see competition from China, and that has reduced the price levels, and so the revenue potential if at present prices has slightly come down by maybe 10% in antioxidants itself, but we do expect as the demand recovers, as the volume recovers, we expect this depression in price to recover as well, because these are unsustainable levels.
Okay, just a couple of more queries on the same point. On butyl phenol, last year you did around 300 crores, right? For this year, what should that number look like?
It won't be very different just on butyl phenols, maybe about 350-400 crores, because the excess capacity utilization is going to go in the captive consumption. So not much in the sales, external sales.
Okay, and antioxidant, it was around, I think, 130 crores. So that goes to what this year?
That should double. So maybe you can expect another 150 odd crores from AO. So total growth of about 200 crores from the combined segment.
Got it.
Vinati, hi, morning. So you've been saying that the growth is going to be volume-led on ATBS. Just a quick point, is there any risk of sort of pricing coming under pressure even as you ramp up volumes? You're expanding capacity in ATBS as well. I was reading a note which said that there is a company called, and you know this better, Advantic Fine Chem, which is also ramping up capacity. And the risk is that they sort of come up with all this additional capacity at the same time that you scale up as well, you ramp up as well. Is that possible that perhaps there could be pricing pressure?
See, well, as far as I know, Advantic started their plant about a year back. And I also know that we haven't lost any market share in the industry, because I can tell from the exports and the data. We also have contracts in place with most of our customers, not just volume contracts, but also formula-based pricing, which means that my price changes based on input prices. I don't expect this scenario to change much in the coming year as well.
So revenue growth in ATBS between 30 and 35%, as you said.
That's
in
right.
FY25. Okay.
Yeah.
And you have visibility for beyond that as well, for a strong kind of growth?
Well, I expect, this product in general grows about 15% on average a year. And so, the new line is being commissioned, keeping in mind the next 3 to 5 years.
Okay. Can you tell us over the next couple of years, or at least in FY25, what is the capex plan that you have, and how much are you willing to put in capex, and how are you planning to fund it?
Sure. So the capex plan for this financial year is about 500 crores. It will be mainly towards the ATBS expansion as well as the new products that we are adding in BL Organics, the 100% subsidiary, and it will be completely funded through internal accruals.
Okay, through internal accruals. Got it. Vinti, thanks a lot for joining in and speaking to us as always. Have a great week. That's Vinati Organics. With the growth that they see in the business, they are expecting a volume-led growth actually, and they're seeing good demand across most segments. But let's shift focus to the commodity markets. What's the one commodity that you should be looking at today? Manisha Gupta is here to tell us more about that. Manisha, back to you.
Thank you so much for that, Sonia. Well, I'll start with the gold and silver prices because we've seen all-time highs come in for this one. I mean, Friday was a phenomenal day. It has been a long weekend for us, but yesterday in the New York session itself, we've seen prices run up further. And Monday morning, as Asia comes back, we are looking at an all-time highs yet again of $2,440 an ounce on the screens there. Gold actually has hit an all-time highs, not just in US or the India markets there, but many of the European countries, in Australia, in China as well, where we are looking at gold prices trading in a premium. Well, there is optimism that Fed will cut rates in the month of September. All the data that has come in on the previous week from the US has been on the weaker side. The dollar index has been slipping as well, and that in turn has given support to the prices. And then it's all about geopolitics. The Iranian president's death in helicopter crash has created uncertainty in the Western Asia, and Iran is just one part of it. We have been hearing, pardon me, statements coming in from Israel as well. There also have been reports on how the Crown Prince in Saudi Arabia has cancelled visit to Japan, and this is after Saudi King Salman's health remains a concern. So within Middle East, there's a lot of shift in power. There's a lot of tensions coming in, uncertainty as well when you look at the politics sides there, and that is really has led to buying come in for various tangible commodities, including gold and silver as well. And then you're also looking at Fed official speeches in this week. Well, that is going to be quite key to watch. It's not just gold. When you look at the silver prices, well, we are trading quite on the firmer note here as well. In the last 1 week itself, we've seen silver prices gain up by 7.5%. In the Indian markets, we are trading at an all-time highs and not too far away from that lakh rupees a kg mark as well. For the international markets, we are holding around $32 an ounce right now. This is the highest price since December 2012. And in this year until now, we have seen the silver prices gain up by 33%. Apart from the geopolitics and the rub-off effect from the gold itself, it also has to do with the industrial demand that the silver is looking at. Well, this is going to be a fourth straight year of deficit in the international markets when it comes to silver. The demand for solar panels is expected to be at record highs. The overall industrial demand for silver this year is expected to be a fourth year of record highs, and that is where silver seems to be taking all its support from. The markets do believe that it is slightly overstretched on charts right now, but nobody is selling. It still is a buy call for gold and silver, both of these precious metals.
Okay, a buy call for gold and silver. Silver ETFs, right? I mean, if you look at the numbers, there are, I think, 8 ETFs now that are offered by various fund houses, and that's crossed the 5,000 crore mark in the month of April as per data from the AMFI. So silver ETFs are picking up in a big way. Thanks a lot, Manisha, for that. Well, let's talk about BEL, the big mover today. Vivek is here to give us more details on that. Vivek, over to you.
Well, good morning. Like we highlighted in the morning, it was a very strong set of numbers from BEL. Q4 surpassed analyst expectations across all of the key metrics. Also keep in mind, BEL is a likely inclusion as far as the Nifty is concerned when the next Nifty semi-annual index review occurs. Now, looking at, the numbers themselves, when you're talking about the revenues higher by 32%, much above what the street was anticipating, profitability higher by 31%. Order inflow, beat very handsomely what the company had earlier guided for. The company earlier had guided for an order inflow of close to 20,000 crore. The FY24 order inflow came in at 35,000 crore. And right now, the company stands on a very strong order book of over 75,000 crore. Now, brokerages, as expected, are very enthused. Jefferies continues to have a buy rating. They've gone ahead and raised the target price to 305 rupees a share. They're saying that the fourth quarter EBITDA was 30% above what they're anticipating. They're saying that the company benefits a lot from the spends across Army, Navy, as well as the Air Force. Now, what they're saying is that the margin strength that the company displayed in fourth quarter gives confidence on profitability sustaining even from these levels. Now, talking about Nomura also has a buy rating. They're saying that earnings beat was largely led by very strong margins that came across. They're saying that the implied order inflows for Q4 was almost 8,200 crore, which was almost 4% above what Nomura was anticipating. And lastly, Morgan Stanley, again, they have an overweight rating over here. They've also raised the target price. They're saying that the FY24 margin of 24.9% was significantly above 21 to 23% margin band that the company was giving. So overall, very strong set of numbers. Brokerage upgrades have come in, and the likely inclusion into the Nifty 50 is something that's keeping the stock very active.
All right, thanks a lot for that. Well, let's also talk about Balkrishna Industries. The stock is up 6% right now. The numbers were good, actually. There were no problems with the numbers. But brokerages are a bit mixed. So let me just take you through some of the brokerage notes. Kotak has a sell with a target price of 2175. Motilal Oswal has a neutral with a target of 2535. Citi has a sell with a target of 2300. The only optimistic one is Nomura. They have actually upgraded the stock to a buy with a target price of 3230. Now, the reasons for a bit of caution is that the company did not give any guidance for FY25. In fact, in their conference call, they said that it's too early to give any guidance because of how the geopolitical scenario is shaping up. They also spoke about how there is some increase in raw material costs, rubber prices, crude prices, and freight rates have also been elevated. So these are some concerns. However, one must remember that the stock is surging because the numbers, Q4 numbers were very good. Revenue growth of 15.5%, margins have improved, volume growth of 13%. So that's something that the street liked. But overall, if you look at it, brokerages are a bit mixed on the stock. But Sonal is also with us to talk about Sudarshan Chemical and why you should be watching that one. Sonal, over to you.
Well, thank you so much for that. The company reported numbers on 17th of May, but last night it uploaded the investor presentation, and that is what the street seems to like, the commentary out there. Now, remember, the company reported highest ever income from operations in Q4, and it was majorly contributed by healthy growth in domestic sales. That's what the company is talking about. The operating leverage with YOY volume growth led to the highest ever EBITDA as well. So the export revenues saw a low single-digit growth of around 2%, but domestic revenues saw the growth of around 15%. But quarter-on-quarter growth in exports was strong at 23%. And the company says they are seeing improvement in Europe sales and there's continuous improvement in North American sales as well. So export as a pie continues to do well for Sudarshan Chemicals. They are monitoring any crude oil price movement and potential impact on any other intermediary prices as well. That'll be important to track according to them. But their cash conversion cycle has reduced to 66 days versus 74 days. Their net debt to equity has improved 0.3 times versus 1 times on a YOY basis. And their domestic market share is estimated to be around 35%. So strong P&L and strong balance sheet as well. The company says they are focusing to shift towards higher share of specialty segment and they will continue to expand their product portfolio, and they're quite optimistic on future prospects as well.
All right, Sonal, thanks very much for that. So Sudarshan Chemical seeing a big double-digit move right now. We'll take a break. We are back in just a bit. Gautam Dugar of Motilal Oswal Financial Services will join in on the other side. And we take stock of the earnings so far with the majority, I think, in the bag. How do they look and what have they done to the full year FY25 earnings estimates? Stay tuned. Welcome back. Let's connect with Gautam Dugard now, Head of Research Institutional Equities at Motilal Oswal Financial Services. Gautam, good morning. Good to have you here. Appreciate your time as always. Time to take stock of earnings. And what are your full year FY25 numbers moving based off what you've seen for the last quarter?
Hi, Prashant. Good morning. Thanks for having me. So as of yesterday, if you look at the earnings season in totality for the fourth quarter, about 201 companies in our coverage and 41 Nifty companies have declared their results. The numbers have been better than expectations. We had a very modest expectations going into the quarter. So for our set of 201 companies, the earnings growth is about 9% versus expectation of 4%. This is also a drag from OMCs. If you keep aside those three OMCs, the rest of the 198 companies that you look at on a YOY basis, the earnings growth is about 14%, which is almost double of what we were expecting, about 7% growth. And for Nifty, the earnings growth is about 13%, which is far better than our expectation of about 5%. As far as forward revisions are concerned, Prashant, the upgrade downgrade ratio, as we call it, for companies which have seen a plus minus 3% or more than 3% kind of a revision, the upgrade downgrade ratio is almost same. 48 companies have seen an upgrade of 3% plus, and about 52 companies have seen a downgrade of more than 3% for FY25. As regards forward EPS estimates, as far as FY24 itself is concerned, we have seen an upgrade of 2%. So when we went into the preview, we had an expectation of about 976 rupees for FY24. As we are about to now close the earnings season for FY24, we are reaching 995. This works out to about 23% earnings growth versus a delivered EPS of about 810 rupees. And for the next 2 years, for Nifty FY25 and FY26, our estimates are stable around 1130 and 1320 rupees, which is a growth of 14% for FY25 and about 16% for FY26. So CAGR of 15% on a base of a 23% delivered growth this year. So net earnings season has been quite stable, and more importantly, the spread of earnings have been fairly strong. I mean, within the sectors that we cover, barring specialty chemicals, all other sectors have either beaten expectations or have met expectations. So both in terms of aggregate performance as well as the spread of the earnings, the season has been pretty solid.
Okay. Gautam, hi, good morning. I wanted to talk about some themes, right, that have worked very well in this earnings season for a while, actually. One of them is this Indian companies manufacturing for the globe. So, for example, we were talking about Dixon Technology, right, and how they've now supplied to some of the largest mobile companies in the world, very good numbers this time. We're also looking at some of the defense companies that are doing very well. BEL, for example, this morning is up 7%. From here on, which are the companies where you think could give you maximum potential based on this theme?
I think, Sonia, some of these themes that you spoke about rightly, they are a multi-year theme. It's not as if they started performing well recently. They've been doing well for the last 2-3 years. And if there is a policy continuity after this election, the results of which are going to be declared 2 weeks from now, then I think there will be far more traction in the same set of themes which have been working, which is industrials, infrastructure, manufacturing, PLI-based themes. So I think the tilt of the market, which shifted post-COVID towards domestic cyclicals and some of the forgotten sectors from 2010 to 20, they've come back roaringly in the last 3-4 years. I think that theme can continue. We can add few more sectors to that, themes like real estate, discretionary, even auto, for example. Auto once again has been the best performing sector in this quarter and has beaten expectation. Spread of the earnings has been fairly strong too. You spoke about Bharat Electronics, a stock that we just upgraded yesterday. Solid set of numbers, earnings upgrade of more than 20%, and the visibility on order book is fairly strong. So, whether it is defense or capital goods or infrastructure, real estate, these are the themes which have been doing well for a fairly long period of time. And we do expect them to continue to do well in the forthcoming few years, assuming there is a policy continuity.
Gautam, let's just assume for a bit that we're at about 22,500, right? Pretty close to the previous all-time high, around 22,800 or so. And we get there by in the next 2 weeks, right? And numbers come and there's continuity. around the last year's number. What are you expecting a big move? What are you hearing, and just some feedback once that comes? Or you think it'll be business as usual? You think there has to be some readjustment, a one-time kind of 1 day, 2 day thing, or not really?
So Prashant, these are very difficult things to predict, but you go back 2 weeks, when there was some nervousness which was creeping in around, political certainty. But after phase 4 and phase 5, again, there is a sense of calm and stability. And some of the famous psephologists have already sort of given a hint as to what is going to unfold on 4th of June. So market has been having a sigh of relief of late last 4-5 days. If you see the action in small cap index, if you see the action in some of the PSU companies. So I think we are not going into the election with a lot of rally behind in the last one odd month. We're going around in that same 22,000, 22,500 band. Now, depending upon the results, depending upon the outcome and the margin of victory, market will have a few days of reactions. But beyond 2-3 days, if the election is in line with expectation, the outcome is in line with expectation, I think market will then again go back to fundamentals. Then people will start anticipating the big announcements that Prime Minister has promised in his first 100 days of tenure, potential budget-related changes or announcements. As far as fundamentals are concerned, as I said, we have closed the year with a good 22-23% earnings growth, and the projections are 15% CAGR for next 2 years. So today you're trading at about 20 times 1 year forward EPS of 11.28. You assume that 8-9 months later, if you were to traverse a similar journey and trade at 20 times 1 year forward again, that point of time you will be discounting FY26 EPS of 1330. If the 20 PE multiple sustains, mathematically you are talking about a range of 26,000, right? Assuming there are no big changes in the earnings estimate along the way, and we don't get any surprise on 4th of June. So there is a range which is well established for more than 2 years now. Market has been largely, as far as Nifty is concerned, very nicely trading around 20 times 1 year forward.
One more theme that has come back in a big way is the return of rural demand, right? Whether it's most corporates that have an exposure, whether it's Hero MotoCorp, Colgate, Dabur, HUL, all of them spoke about green shoots of recovery in rural demand. To play this theme in FY25, what are the top stocks that you'd look at?
So this rural revival is coming back into reckoning and narrative after almost 2.5 years of a rural slowdown. Last year, we've had a very bad monsoon. This year, IMD and Skymet both have projected that the monsoon is going to be normal. On top of that, some of the bellwether companies in consumer and auto, which has a slightly larger, salience of rural, they've spoken about some some early signs of green shoot. So if that transpires, then I think there is a decent room for an upside in some of the heavyweight in consumer and auto sector. Obviously, consumer has been underperforming for more than 2-3 years now. Stocks like Hindustan Lever have been flat for 4.5 years now. From February 20 till today, the price is more or less in the same range. So possibly, if there are some earnings upgrade along the way, that will help. Plus, inflation has been in a control now. Commodity prices have been in range. So all of this put together gives you a decent backdrop for some rally in a consumer sector, which are predominantly rural-facing themes. So there you might expect some sort of a rebound. Auto has done very well. You've already seen M&M, which is part of our model portfolio, hitting a new high after posting a very good set of numbers with a very good sort of a commentary for next year. So I think some of these stocks have already rallied, but given that they're coming on a 4 years of underperformance, it will not be far-fetched to expect that there can be some more rally in those names. And do remember that last 3-4 years has all been about domestic cyclicals and capex side of the cycle, wherein consumer stocks got left behind, especially staples, because discretionary has done well, which is where we still have a big overweight compared to staples. We are still underweight on staples. But tactically over the next 6 months, if monsoon, which is about to arrive in next 2 weeks, if it is normal, then possibly you will see a good sort of a rebound in some of these names.
All right, Gautam, we'll leave it there. Thank you very much and good conversation as always. So, FY24 earnings, Nifty earnings have moved up a little bit. 25 earnings, you're pegging at 1130. and 1320 for FY26. So, decent sort of earnings growth estimates for the next 2 years lined up as well. So that's Gautam Dugar of Motilal Oswal Financial Services. Markets, by the way, are down about 20 points. So it's a very quiet Tuesday as it turns out. Lots of action in terms of specific stocks. And that's going to be the focus here over the next many hours as well. Those are indices. Mid-cap index is flat. The Bank Nifty is down about a quarter. And the small cap index is also kind of sideways. It's a wrap on this edition of Bazaar. From all of us here, goodbye. Thank you very much for staying with us. Chartbusters will pick up on all the action in just a bit.